Good Monday morning. It's a few hours for the market opens, and I want to go over what we saw last week and what we could see this week in the markets. Last week, obviously, the S&P 500 fell over 3%. The NASDAQ fell about 5%. And the Dow fell just over 1.5%. There were three main reasons for the drop. The first one is on Tuesday, you had the JOLTS come out. So the consensus was about 10 million job openings, and the actual was 10.7. So obviously this made the markets go lower. And then on Friday, you had the unemployment come out, which was pretty much in line for the most part. It was a tick higher. The expectations were 3.6%, and the actual was 3.7. Interesting enough, the participation rate, was still low. Actually dropped from September. So September, you can see we're about 62.4, and then October was basically 6.2%. So you saw a drop here, still low. You compare it to pre-pandemic levels, which were, around 63, over 63%. So still low in the participation rate. And then, of course, on Friday, you had the FOMC press conference where Powell squashed all the dovish pivot talks. A lot of people were hoping that he would come out and ease the market, saying they're going to slow on rate hikes. But he did not say that. He essentially said that there'll be more rate hikes in the future. And once he said these comments, the markets dropped pretty quickly. We also had earnings last week. Berkshire Hathaway, which I found the most interesting, announced their earnings on Saturday over the weekend. The main thing I wanted to see is if they mentioned anything about Activision. Pull the chart. So Activision, as you know, has a buyout offer from Microsoft at $95 per share. And you can see here when they announced it, the price shot up to about 86, but then has dropped down to below 72, and it's kind of testing this new low here. There were huge blocks being sold of Activision in October. There was a block of 3.7 million shares, and I was wondering if this was coming from Berkshire Hathaway. So I was reading through the earnings report. There's no talk of Activision, which I think I assume they're still holding the company. But you can see if I pull this up, I mean, we're talking about a 31% move up at the acquisition price, the offer price there. So a lot of movement up if that acquisition goes through. The CPI report comes out Thursday morning. This is what will really drive the markets this week. You can see here that the consensus is 8%. I've seen on other platforms, analysts are predicting 7.9%. What's interesting about this is the Cleveland Fed is predicting 8.2%. Cleveland Fed has been underestimated the CPI 16 of the last 19 times. So if the market is expecting 7.9 or 8%, and the Cleveland Fed is expecting 8.2%, and if that is low and it comes out to be 8.3, even 8.4%, that will be much hotter than what the market expects, and will most likely send the markets lower. As you can see here, I have the VIX and the S&P 500. You can see they're inversely related, and if you look at these little green circles, this is where the VIX was at the previous CPI reports. You can see the last two. You can see where we currently are. So it seems like the market is really under hedge for this report. I don't know. It's just because the next Fed meeting is in December, and we're gonna have another CPI report in November. So investors are not really hedging themselves like they were previously on the last two. But if the CPI report comes out hotter than expected, you're going to see the VIX move up, and you will most likely see the market move lower. And pull up some other charts as well. So let me pull up gasoline. because if you pull up, well, let me actually pull up the CPI so you can actually kind of see it on a chart. So here's CPI. If I scroll this out here, you will actually see what I'm about to say. So, all right, so you can see this going up, and then you can see it kind of flatten out roughly through June, really to August. And the main reason for that was gasoline. Let me pull up gasoline, and here you can see, if I put it on the monthly, you can see gasoline drop from June really to August or even September, about 43%, which helped flatten out the CPI number. Interesting enough, in October, however, gasoline prices went up over 7%. So how that gets worked through the CPI report will be interesting, but it's just another factor, kind of for the argument that CPI is going to be hotter than expected. Furthermore, if I look at, let me pull up the CPI report again. So in this chart, this blue line is the CPI number, and then the purple line is General Mills. And what you will see on with a lot of, not all, but with a lot of the major food manufacturers, is that the stock price goes right in line with the CPI number. And you can see General Mills stock move up, which could produce, again, another higher CPI number. If I actually just pulled up the General Mills stock price and pulled up the monthly, you can actually see this in the month of October, it was up about 7%. And if I pull up Archer Daniel Midland, you'll see something similar. So let me go here to the monthly, and you can actually see it. So you can see this bar right here. You can see this is the month of October, and you can see it was roughly up about 20%. So just other indications, the CPI number could be higher this month, and it could surprise. And if that happens, again, watch out. The markets could really react. Here we can see the S&P 500 and the dollar index. This has been trading inversely with each other throughout the whole year. If the CPI report comes out hotter than expected, you most likely will see as rates go up and the dollar shoot up as well. Again, just another indication that the market will drop lower. And pull up the NASDAQ, and the NASDAQ, what you'll see here is that it's been flirting with lows right down here. So this also looks like it could possibly be ready to break lower here. You see it flirting right there. Again, CPI report comes out. This could be a nice little breakdown from the NASDAQ. The NASDAQ has been trading pretty much in line with the tips. That is not what I'm looking for. The tips ETF throughout the whole year. And the tips, as you see, it looks very similar to the NASDAQ. It's in this little channel, but it's been flirting with lows right here. If the tips go lower, watch for the NASDAQ to follow as well. A couple other stocks to look at. We've been shorting ARK throughout the whole year, and it's been in this little downward channel for a couple months now. It looked like it could have broken out right here, but hit the kind of made a little bit of a new high in the channel, but then came right back down, and now it is flirting with its recent lows. It's most likely going to follow the NASDAQ. So if the NASDAQ breaks lower, watch for the ARK to break below this 3450 level here, and could fall significantly lower there. Obviously, ARK, Kathy Wood loves Tesla, so let's take a look at Tesla as well, because it also, in my view, has a negative looking chart. You can see it's been testing this kind of 207 area for a while. It's bounced back off of it here. It's been testing it. It came down, tested again. It keeps bouncing off of it. But you would think that if the market falls, the NASDAQ falls, Tesla would follow, and it would break below probably permanently this 205 number, and could get all the way down here to 185, 186 as that goes back even further in the chart where that level bounced off. A couple others. Let's take a look at Oxy. So Oxy was in this kind of upward channel, and now it looks like it's in this kind of triangle here. It's kind of hitting these highs, but also within the channel previously. So if this gets above 75, it could trade up higher nicely to this kind of outer band channel. And finally, last one I want to look at is Intel. Intel's definitely been the biggest lagger in my portfolio all year long, as it just has fallen and fallen and fallen. However, they did get a good earnings report last month. They beat expectations on revenue and earnings. And what you see here is the chart is actually now looks a lot nicer than previously. It's in this upward channel here. You see the momentum is making new highs as well. So this is one positive for this week is Intel. Couple other notes. Obviously, we have election day on Tuesday. It'll be really interesting to see what happens. Most experts think the Republicans will take back the House and the Senate. I'm interested to see how the market reacts to that news. If that stabilize markets, or you'll see a drop in the market. So I have no predictions, but I'm just interested to see how the markets respond. The bond market is closed on Friday, but the stock market is open. I just want to say thanks to all our veterans and your service. I hope you guys have a great week and good luck.